Hello and welcome to a new interview with Kalkyl. My name is Albin Eriksson, and today I'm here for the first time with the Beyond Frame CEO, Ace Germain. Welcome, Ace.
Hi, thank you so much.
Kalkyl has just initiated coverage of Beyond Frames, and today we will have the opportunity to hear a company presentation from Ace. And after that, we will move on to a Q&A session about the business and your upcoming pipeline. So perhaps we could start with the US telling us more about Beyond Frames.
Yes, thank you.
Yeah.
Yeah, hi. So again, Beyond Frames is an XR-focused games company out of Stockholm, Sweden. XR standing for extended reality. So we primarily focus on the development of interactive entertainment for mixed reality, augmented reality, virtual reality, spatial computing, whatever, what you have it. Yeah, so let me just run through this. So obviously, again, as mentioned, we are focused in the immersive experience game space, primarily focused on putting games inside of headsets and other devices that really provide heavy immersive experiences. And that for us has been explosive growth over the years. So, in 2024, we had a record-breaking year for our gross revenues. In 2025, we had a record-breaking EBITDA for a single quarter. And we primarily achieved most of this by having a pretty diversified portfolio with spread out risk, which I'll talk a little bit more about later in the presentation. We currently have one of the most anticipated VR games of 2026 in our portfolio ready to go, currently working hard on that. And overall, that's really positive for us because XR growth has been extremely positive for games. We are actually outpacing the standard games market and has continued to see growth in that space, at least since I've been in the industry. It's been really positive for us. And I think we're currently also at a really interesting inflection point with smart glasses, which we believe is going to unlock mobile scale engagement across our entire industry and overall portfolio. And as you can see here to the right, we've had a significant growth since 2021 with 94% CAGR in our business overall. So I've been talking about the extended reality market quite a bit. And again, that encompasses virtual reality, mixed reality, augmented reality. You might have heard Apple call it spatial computing. But again, it's the idea of headsets and glasses where we've sort of put you in a virtual environment or an extended reality space where you can see digital objects in your real world. And again, this is being driven primarily by some of the biggest tech companies in the world, like Meta, Apple, Valve, Pico, which is owned by ByteDance, which is TikTok, and Android, which again owned by Google. So the biggest tech companies in the world are pouring billions of US dollars into the development of this technology. And as you can see, we've had significant healthy growth over the years in terms of people adopting XR over time. And what's been really fascinating is this new advancement in smart glasses, which again are far more approachable, comfortable form factors. They fit really neatly and comfortably on your face, like any set of sunglasses would. The way that the world is looking at this as being a mobile enhancement, similar to maybe your smartwatch, or a full-on replacement, as we're now seeing with things like the Meta displays, which you can actually control and text people directly from your glasses using discrete gestures with your hands, like at your side. So it's pretty fascinating things happening in the technology space and smart glasses. But again, more billions in R&D happening from these major tech companies. And in terms of adoption, we've actually seen a 300% increase from consumers year over year from 2024 to 2025. And we anticipate seeing more as the glasses form factors and power and price become more competitive and significant. And within that growing market, actually, games have been a significant driver in the overall growth. It truly is a rocket ship in a very mature market. So I think when you think about games, games as a whole is obviously a many hundreds of billions US dollar market. But in terms of XR games in the space between 2019 and 2024, it actually had a 33% CAGR in XR games alone versus a 4% CAGR of traditional video games. So again, even within this rapidly growing sort of like big market, we are a rocket ship within it. So it's a pretty exciting space to be in. And just some other metrics just to kind of prove out what kind of money is possible in our space. By 2023, the MetaQuest store, which is the store owned by Meta, that sells the apps for for their headset that they own, made over $2 billion in a single year. In 2023, over 40 games were made over $10 million in revenue for VR. And so, it's a pretty significant chunk. And there's games making even more than that. There are games that have made $100 million and more. You see here in the middle, Beat Saber reached over 255 million. I believe this was a report from several years ago. So, and we've actually benefited from this as well, as we have games in our portfolio that have made tens of millions of dollars in this space over a single year or two. So it's a pretty significant space for us in games. But despite all that success, we are always looking at the problem and how we could potentially solve it. So despite the success, there's been a significant bottleneck of how to get more content into the ecosystem. Because again, players are in need of games to play, the distributors are in need of content, and the studios who make the games are in need of funding. And all the traditional ways that games normally get funded do not really exist in the XR space. And that's where Beyond Frames comes in to be a player on both the development and the funding side for the games ecosystem. And we do that through two areas of our business. On the left side here, you have our studio business, and those are the owned and operated studios, of which we have 3 award-winning studios under our umbrella, who've launched 7 games in market with 2 additional ones in production. And we also have our publisher business here on the right, which is primarily focused on also helping external studios that don't belong to us help get their games funded and to market. In that portfolio, we have currently have 10 games launched. That business also focuses on new device research and development, as example, smart glasses, and also porting other content to new devices to help generate more revenues, both for us and the other studios. Now, for those watching who aren't familiar with the game development and funding pipeline, this is pretty much how it works. You have your developers who have a game idea and game concept that they want to bring to life. They typically approach publishers who go in and risk funding and also provide distribution and marketing support to move those games onto platforms, again, like the MetaQuest, like the Apple Vision Pro, the Steam Frame, and other headsets in the space that can play virtual reality games. And then those are then sold to consumers via those platforms. The sales of those games then go back into the pockets of developers and publishers who supported the development of the game in the first place. And from time to time, because we are a growth ecosystem, the platforms themselves will provide additional stimulus in the form of development funding directly to developers or through publishers to give to developers so that more content can be made for the ecosystem. Now, again, we have this two-prong approach of being both a studio and publisher, and this allows us to create much more diversity within our portfolio, not only in the kind of games we make, but also with the way that we finance games and earn money from games. So our revenues get fairly diverse as well. Now, starting at the bottom of this pyramid you're seeing here, that's our publishing layer. Now, our publishing layer allows us to get to market fairly quickly at much lower risk and much higher volume. That's because we typically provide last mile development funding, meaning somewhere in the low hundreds of thousands USD, to be able to get the access to a revenue right, an ongoing revenue right for the life of a product. Now, the other thing we get out of that that's extremely important is the data. Now, at high volume, that's extremely helpful. So we usually take the data from our publishing layer and then de-risk our much higher margin but higher cost studio division, which goes out and develops our own games based on our own IP or licensed IP to bring to market at, again, a much higher margin, and usually walks away with an asset like an owned intellectual property that then helps not only on our balance sheet, but on future business. Now, just to help consolidate that and summarize like how that's helped, it's helped considerably. So again, we've had a lot of games published, and we've been able to take that data and move them into our studio division for development. So again, these are much more informed pieces of development that also allow us to secure some additional funding, potentially externally from other parties who want to help us bring these games to market. Here is a great example of a game we launched this year in April called Gorn 2, which was a sequel to one of the best-selling games in VR of all time. It launched at #1 on Steam VR and the #2 premium price title on the MetaQuest store, the highest sections we've ever had as we started this strategy. So again, proving out that our efforts in terms of being able to de-risk the potential uptake of these games, and also being able to find external financing work quite well. Additionally, we were able to take that data and secure intellectual property rights to Teenage Mutant Ninja Turtles Empire City, which is going to be the very first game in the TMNT franchise in history in virtual reality, and is currently the most anticipated game of 2026, which is measured by the amount of people who've wishlisted and asking for more information about the game. So we've never had that pole position before in terms of being able to be this anticipated going into a launch. And so we're extremely excited to see what that nets out for us financially. So in terms of our growth journey ahead, we're still seeing a lot of growth out of our market. We've got to try to meet that strong demand with strong supply. We have a really great portfolio model, and that has generated a really strong base of revenues for our company. So as we continue to charge on that and watch the growth happen together, we're hoping to see even more revenues come out of this catalog that we've built. And of course, we have a strong slate of new titles coming out of our studios that we anticipate will bring significant revenues to the table and profitability as we move forward. And we also have this really exciting future in smart glasses that we strongly believe in. So again, smart glasses for us is a natural evolution of all this technology we've been building for these larger virtual reality headsets. And again, we're seeing rapid growth, we're seeing the heavy investment, and we're seeing the rapid technological development from this space. And again, it's not really theoretical anymore. If you were to ask anybody in our space whether or not we would be this far in smart glasses 2 years ago, they would say absolutely not. We were probably anticipating it another 5 years from now. But the future is here today, and we're extremely excited about the inevitable future where smart glasses are going to need third-party software development support to help stand up their ecosystem. And that's really what we're looking forward to today. And that's us in a nutshell.
Perfect. Thank you so much for that presentation, Ace. I thought we could now begin the Q&A session then. So I thought we could start with you, Ace, and you joined the company in 2022. What was your ambition when you took the role as a CEO, and how has it played out so far, would you say?
Yeah, sure. So oddly enough, I really wasn't sure about virtual reality when they asked me about the job, but it was the Christmas of 2021, and I had gone back to California to go visit some family, and I landed, and it was nothing but billboards and radio, like radio advertisements. I found out every single one of my nieces and nephews and friends, cousins had virtual reality. It just exploded outside of Sweden, and so I had no idea. And just seeing that and seeing how much it was being adopted and what people were saying about it, I had to take it up. It just really seemed like the future of entertainment and the future of interactive experiences was going to live in XR, and was really excited about the technological advancement that was happening. And so, yeah, I couldn't pass up the opportunity to be a part of that.
Okay. And what qualities and experience do you bring to Beyond Frames that you consider valuable?
Yeah, sure. It's always hard to talk about yourself. I think that though, I would say probably the thing I've found as I've reached into the toolbox and have nearly been surprised about the most helpful things is I've had a pretty varied career. I've worked at some pretty high profile tech companies like under Amazon and under Twitter. I was also at Sony. I was also an entrepreneur and exited my own company. I've also had an opportunity to work in entertainment, so working in companies like Crunchyroll and Warner and things like that. So I think the varied industry put a lot of exposure on things like product and entertainment and business development. I would say the Rolodex has helped a lot in that space. But I would say probably the number one thing is at all those places, I had an opportunity to work with a lot of really brilliant people. And I always saw that probably the most effective thing as a leader is to just try to figure out a way to point those people correctly. And I think coming here, there's a lot of brilliant people here already. And so had the opportunity to kind of point them in the right direction. I think that's probably been the biggest thing. So.
Okay. Understand. Looking at your financials, your revenues increased significantly during 2023 and 24. Can you explain the drivers behind that growth?
Sure. I mean, honestly, it was investing. In 2022, when I arrived, they had a publishing group together, but had not spent a penny on content. There wasn't really a great framework for it, nor were we moving very quickly on how to think about that. It was operating roughly on kind of an old school model of like, oh, what do we like? How to think? How does this feel? I'm not sure if people watching this are going to be familiar with the book or the movie Moneyball, but sort of famous from where I'm from in terms of the baseball team it was based on. But in short order, it was you have to play a bit of a numbers game. You have to kind of buy towards where success looks like, try to take as reasonable risks as possible, and then just try to play that numbers game. And that was a little bit where our strategy came from. So we went from having no games in publishing, not even in contract when I arrived. By 2023, I think we had 7. And so we went from maybe having a handful of games that were distributed over several years to suddenly having tons in a single year. So that was a massive driver. Then obviously among those numbers, the theory played out, and a couple of those ended up producing some significant revenues over time. That also drove a lot of other momentum around our studio business, which meant we were able to secure interesting money from distributors and other publishers who really believed in our model and our business. And so that also contributed to the revenue increase, especially in 2024.
Okay, I understand. And can you explain the difference between your publishing operations and your own game development? I mean, in terms of scalability, workload, margin profile, and so.
Yeah, absolutely. So our owned and operated studios, which is what we classify as our studio business, is made up of Cortopia, Moon Mode, and of Odd Raven, which is our where we have more of a minority share. Now, for those studios specifically, the way that they get their financing is pretty similar to the way that we think about publishing financing. However, it's a much higher margin business. The risk with it is that it costs a lot more money for us, right? So much more expensive, but much higher margin, and also the development of our own intellectual property. So that's usually how that works. In terms of scalability, we can produce a lot fewer games out of that unless we scale up significantly with more cash. And so, we need to be pretty targeted on what we're doing there versus, and those productions usually are in the low millions of US dollars, anywhere between like 1 to 3, and in some cases like 5 to 7 million. And then the way that we finance those is usually through partially us and partially external parties. On the publishing side, which does handle our internal games as well, but the way that we think about that part of the business is we go out and offer, 100 to 300,000 US dollars for a revenue right against a game that is going to come out over the next 6 months to a year. We also provide ongoing services there, so that's a cost to us internally. However, when you think about the difference between spending millions and spending low hundreds of thousands, you can put a lot more bets in play, even though the margins are significantly softer. So just to give you a sense of that, on the studio side, our margin against a game might, after the store takes their fee, our revenue return out anywhere between 50 to 80%, depending on who also invested. On the publishing side, our take on that after store might be anywhere between 20 to 30%. So it is quite different.
I understand. And you may touch a bit on that, but can you walk us through the dynamics behind that you haven't been profitable historically? And has this been a deliberate choice on, where has it?
Yeah,
like
100%.
that?
Yeah, no, it was absolutely a deliberate choice. We were sort of faced with a decision as early as 2022 when I first started, which was we could scale down and be this small, profitable company. But when I came on board, I made a promise to to the owners, the shareholders at the time, that we had sort of a loose goal floating out there of a certain like revenue opportunity that they held in the space, I think, as an initial target. And I think at the time we're maybe doing 20 to 30 million crowns annually. We're nowhere near where that target was until we needed to start investing. And I think what we proved in the year following was unless you invest, there's no revenues to be gained. And if we were to downsize while we were already that small, the incremental growth would have taken a couple decades to maybe get to, I think, if we were lucky. So what we were able to show and what we wanted to do was, hey, let's make sure we get to the kind of revenue growth and baseline revenues from our catalog and new things happening, where we can generate the kind of revenues that even if we were to make efficiency changes in the company, we would have the kind of revenues where we would be significantly profitable, not just marginally. And so I think that was really the big goal. So, up until now, that's been the target. And I think Turtles is probably one of the bigger last pieces of that puzzle when it comes to that change. And yeah, I mean, where our goal is obviously profitability more near term.
Yeah, my next question was how you that you intend to focus on profitability now and how you plan to achieve that. But you may say that it's TMNT that
Yeah.
uh,
Right, exactly. And again, we've had a lot of really other interesting conversations. I think, we're not betting everything on TMNT. We always have something cooking in the background. But that is a goal for us. I think that we wanted to put these bigger bets that were being heavily subsidized by external parties out while the opportunity was available. Right now, actually, that opportunity is much narrower than it's ever been before, just due to macroeconomics and the games industry in general having gone through significant changes. So it was good we took the opportunity when we did. And as we move forward, we're going to flex our way into much better margins and profitability as we think about every deal we do moving forward.
Interesting. Can you tell us more about the TMNT? I mean, the game and the IP and the organic reach that TMNT has?
Yeah, sure. So we're working directly with Paramount and Skydance on this. This was a license we had to acquire from them to be able to make the game. Now, this is going to be the very first virtual reality experience for a standalone Teenage Mutant Ninja Turtles game. The decision behind doing it was driven a little bit selfishly, but in virtual reality, social experiences are so rich, and what's a better social experience than putting on a headset and kind of waking up in world to three of your brothers and having a shell on your back and three fingers on your hands, the parkour around like a semi-open world New York and like fight ninjas. It felt so organic to what made a great virtual reality experience even before we even made the game. So it made a lot of sense. But we didn't go into it blindly. We've also had a lot of research behind it to say that this was the way to go. Partially, the total addressable market was massive. I think TMNT as a franchise grosses like in the top 20 of all intellectual property in the world in the history of intellectual property. It's the top 20 producers. It's like multi billions of dollars annually on. And I think actually just recently in 2003 alone, they cleared $1 billion in merchandise sales, like just by itself. So, not necessarily the worst horse to hitch your cart to. So I think that's a big focus for us.
I understand. How would you assess the potential of TMNT? And then I think both in terms of revenue, profitability, and also brand building for Beyond Frames.
Yeah, I mean, actually, if I were starting the last part, just because it's been so significantly it's provided such a significant lift for the company when it came to brand building. Because despite some of the record-breaking revenues that were provided by some of our other titles, it was really hard to get the door open with a lot of potential partnerships that could have been revenue driving for us because we're relatively unknown given VR space in the total gaming space. But the moment we started talking to people about making a Ninja Turtles game, suddenly we were almost familiar to them. Like we were like, oh, okay, if they're trusted by this major, multinational entertainment corporation, if they're building something at this caliber, these are people we want to talk to. So even more distributors started contacting us, more investors, other things. It was a really big driver for us. Publicly, we have announced that our anticipation for gross revenue for this game is anywhere between 350 to 700 million over the course of 3 years of this game being in market. And so that's what we've said publicly. And obviously, we think that this is a pretty solid estimate based on other metrics that we've seen. You might have seen earlier in the presentation, I showed that Walking Dead cleared $100 million by itself, and that was 2 years ago. So, we feel really good that IP per capita has done fairly well in VR when treated appropriately, and I think we're making something kind of one of a kind here. So we're pretty excited about it.
Interesting. How would you view the risk of TMNT being the launch being delayed, and what would the financial implications be for you, if so?
Sure. I mean, we have really minimal chances of that happening, at least at this stage. We've passed every milestone as we've had going into this development, and which we're really proud of. And I think that, but with any software development, game development, there's always a risk that near the end there's something that fails, like a last QA test and whatnot. So I would say that if it was going to get delayed, we wouldn't, which again, we're not anticipating it to get delayed, but if it did, it would be a matter of weeks to like a month, maybe 2 months at most, just to repair something that might be more complicated than we anticipate. The financial implication then would be pretty minimal, though, because towards the end of a development, you rolled most people off of it into new projects, or or if they were external, you break the relationship so they can move on to their next project. And so by the end, it would be maybe carrying the cost for a couple things, and then whatever forecasts people had in terms of shortening that by a couple months to the end date goal. So yeah.
Yes, and we can leave TMNT for now, and I'm a bit interested if you could explain how your revenues are recognized when you act as publisher versus when there is an external publisher involved.
Yeah. Sure. Yeah, so the way that all games are, they're subject to the retail tax that every other retail is. So when we sell a game, the platforms like your MetaQuest or PlayStation will take 30% immediately. So then of the 70% that's left, that gets shared between people who help finance the game and us. Now, that sort of answers the question for the rest of them. So if we have an external party, there will be a certain amount of revenue that they take and then split with us. And then usually in that relationship, there's a recoupment period. As a great example, we've been very public about this. Gorn 2 is published by our great partners at Devolver Digital. After that 70% is taken by the store, they currently recoup 100% of all sales until they receive their financing back, in addition to some of the marketing costs that they put on the table to help us get to market. So once that's done, it'll revert into a revenue split between ourselves and them, and actually the original IP holder. In the case of Escaping Wonderland, which is actually also still under recoup under our studio model, that was because it was partially financed by a third party. They're getting a chunk of a higher percentage rate, not at 100%, but they are getting a higher percentage rate. Once they recoup all their money, that percentage drops considerably, and then we get a majority of the revenue thereafter. So that's how studios works. On the publishing side, it's the exact same thing, but we're the beneficiary, right? So in this case, the money comes in, we recoup at a higher rate, and then the studio that we're working with gets a lower rate until we recoup, and then it swaps over.
I understand. And could you describe the dynamics of your financing structure, where you talked about recoupment periods, but I mean, how do they differ between your different titles, and what does it mean for you financially, more specific?
Yeah, so they have an inverse relationship. So I guess like the two titles that are under, we have roughly, I think, 4 titles in active recoupment. More than that, if you consider our smaller publishing titles that I think we've written down a long time ago. So if I were just focus on the ones that are meaningful, we do have 2 games in our publishing portfolio. One is called Grim, one is called Silent North. Those are still under recoupment, and we anticipate those still being under recoupment for a while. In that case, we are receiving a majority of the revenues that are coming in from those sales. Once those are done, we'll receive a lower amount, but until that happens, we're receiving a significant amount of the revenue coming in from gross sales. And then when you move over to our studio titles, again, Gorn is not yet out under recoup. We anticipate being able to get out of recoup after this Christmas, after this Q4. And then, in the case of Turtles, there was an investment made into that game. In addition to that, we did have a relationship with a third party called Alpha Nordic, who have a little over 7% of the revenue share coming out of that game as well. So, so again, in those cases, it has the inverse relationship, where as we get out of recoup, then we get more money. So that's where I are with that. Yeah.
Perfect. And if we look ahead into 2026 and 27 and onwards, what does your pipeline look like then? Can you give us any hints?
Yeah, sure. I mean, so the The slightly boring answer is obviously with Turtles coming out, it's such a big focus for us right now. It is, again, the most anticipated VR only game of next year so far, and so we're pretty excited about that. You know, we're not at liberty to talk about it yet, but we have been having active discussions with both distributors and publishers about new ideas we have. And some of those are heating up quite a bit. And so we're hopefully going to announce more about that. But I do think next year, in terms of a focus on our profitability, is going to be focused primarily on studio efforts, probably less on publishing efforts, since that is a cash thirsty sort of part of our business. We're probably going to focus a lot more on studios and move forward. So what I would anticipate is hearing about maybe a couple new studio developments next year.
Interesting. What would you say that the investors should keep an eye on?
I would say this advancement in smart glasses. It's been an incredible growth journey so far, and I think it's actually still very quiet compared to what I think it could be. As a great example, like companies like Meta and Google are spending hundreds of millions of dollars on the acquisition of frames companies, like not smart technology for companies, like literally buying out frames companies for glasses. So you can tell how serious they're starting to get in terms of the space and distribution. We've also been hearing a lot more, not only from manufacturers, but other distributors and brands about how much growth it's in the glasses space, talking about how much growth this has actually brought them in that space. And so, you know, given that we're so primed with understanding the XR space and usability and everything else like that, and we also have the deep connections to these companies already, you know, I would say their growth is going to be our growth. And so I think as you hear more about that, I think keeping Beyond Frames in mind, I think is an important thing.
Perfect. I think it was all of today, actually. Is there anything that you would like to add before we conclude?
No, I just want to thank you for the time and really appreciate opportunities like this, and yeah, getting a chance to be introduced to your investors and learn more. So
Perfect. Thank you for the interview and good luck.
thank you so much, Al.